Welcome back to the Dividend Diplomats YouTube channel. You got your Dividend broskies over here, Bertha, Hurt, and Lanny. And guys, it's 2023, and we're talking about a stock that's been down 29% in the last 52 weeks in the tech sector. We all know them. They're over $1 trillion in market cap. It's time to talk about this stock. But before we do, Bert, what's the word, my man?
You know, everybody. We've got this beautiful, beautiful subscribe button that is sitting right below this video. You know what to do with it. Don't just look at it. Don't just scroll past it. Just, it doesn't take that much effort to just tap it and click it. Subscribe to our channel. Give this a thumbs up. You know what? Lanny and I have a goal. We want to hit 25,000 subscribers. What'd we say, Lanny? End of March is what we're trying to shoot for, everybody. That'd be awesome.
Let's go, guys. Road to 20K. People talk about the road to WrestleMania where the diplomats are on the road to 20,000. We got less than 90 days left. And we want to give out a lot more swag this year. We want to motivate you guys at home to build passive income by buying dividend stocks. So if this video cruises over 400 likes, we're not going to go to 5, but 400 likes, we'll pick a random winner. All you've got to do is subscribe and like, and you're going to get some double D swag, just like this beautiful coffee mug right here.
Yeah, that's beautiful. I love it. We're going to start doing more of that here. We'll throw some on the Twitter too. It's all about just reaching financial freedom by buying income producing assets. That's what we're about. And we want to make sure all of you are about that too. So let's reset here. We're in 2023. The market this week was fantastic. It was green. Everyone but Walgreens had a great week. What was the market up, Lanny? I think it was, I'm trying to think. It was insane.
The market, again, year to date or these last 5 days was up about 2%, which, again, is a lot in relative terms right now. Given that 2022 finished off down just about 20%. So guys, you're seeing a lot of green right now in 2023.
So even with this green in 2023, Lanny and I have flagged this one stock that's in the tech sector that's just catching our eye. It's some interesting valuations. It's been an interesting 52 weeks for this $1 trillion market cap company. So we said, screw it. Let's record a video on this company. Lanny, who are we talking about today?
Little Billy Gates company that he started, Microsoft, ticker symbol MSFT. So right now, guys, we are talking Microsoft trading at $224.93. They're down again 28% in the last 52 weeks. They're 1.68 trillion by market capitalization, one of the largest companies in the world, one of the largest publicly traded stocks out there. We all know Microsoft and use Microsoft daily.
Yeah. And last time Microsoft was trading around these levels consistently was at the beginning of 2021. So they've given up all of those gains from 2021 and it is back to those levels almost. And it's still slightly above where it was in the pre-pandemic. So there have been some gains over the longer run, but it's looking interesting coming down. And you hit it on the head, Lanny. Microsoft it's not easy to move away from when you're a large company. And think of how many large companies use Microsoft, use their subscriptions, have those expensive O365 licenses, have those Microsoft Cloud. They found ways to ingrain themselves even further by attaching themselves to the cybersecurity. That's another license you need per user per year. You want this, you need another license. They have this license subscription model that's expensive, but you need it for most large organizations. And once you're in Microsoft, moving from Microsoft to a competitor like Google and Google Workspace is very difficult, very time consuming. And it's just not a project that a lot of companies see a ton of value in once you're already ingrained in the Microsoft network.
Yeah, very competitive space. Again, the cloud-based business model that Microsoft is pushing out there. Bert said it, I know very close organizations to me are choosing Microsoft 365 SharePoint, because it kind of encapsulates everything that you need. And
yeah, I was saying, look, I mean,
I was gonna say you've got the ability to share all your products, all at the same time with your coworkers. And what a recurring, again, it's a scalable recurring business model. And just from like the dumb base business mindset, that's what investors like. Can you scale the business? Well, Microsoft has perfected it, because as we'll dive into their financials, that ended the third quarter of September 2022, you'll realize the deep profit margins that they have, even after a potentially bad year.
Yeah, and we need to say this too. We're not saying Microsoft products are the best. We're not going to say like, hey, SharePoint's the best experience ever. I don't think those words will come out of anybody's mouth. But it's all ingrained in there, and it's hard to do it. Google has a great collaborative feature, but it misses some of the things that Microsoft has too. Salesforce is trying to replicate the model. They acquired Slack, they've acquired other things, but it's not easy. And Salesforce is dealing with some of the cost to try and catch up to Microsoft in this sector too, because they're laying off people left and right. They grew quickly. So it's a high moat sector for Microsoft. It's a high moat business that's just hard to replicate. So that's what's always interesting about Microsoft. And that's why they're over $1 trillion too.
Exactly. So guys, let's dive into Microsoft's last quarterly earnings release. Obviously, everybody's waiting on the year-end financials, which should be released here in the next few weeks, released shortly after that. But what we have available is third quarter results. Guys, Microsoft Q3 revenue was $50 billion with the B, 50 billion in one quarter alone. That was still up 11%. And the biggest piece here is that cloud revenue business that we keep talking about from Microsoft. And what a great stock Microsoft is, a great stock to buy, great stock for beginner investors, great stock just to hold for the long term. That Microsoft cloud revenue was up a balmy 24% to $25 billion. So that represented, quite a bit of their revenue for Microsoft so far in 2022. And I only predict that to continue to increase into 2023 and beyond. And Bert, when you talk about their net income for the quarter, and then look at that across, the margin that they have.
Yeah, they have very slim margins there at Microsoft. Their net income was 17.6 billion. It's a 35% profit margin. So think about that, everybody. They are making a lot off of every dollar. The numbers are right there. 35% profit margin. Nothing more to really say about that. It's great.
Numbers don't lie.
Paul doesn't lie. Paul don't lie.
And that margin is down. Again, I think any business out there would love to make every dollar of revenue to keep 35 cents of that.
Yeah.
And that's after all expenses, paying employees, every cost that's involved. They're still keeping 35 cents.
Yeah. So let's look at the balance sheet quickly. Are they liquid? Yes. Their current ratio is 1.84x. They're very liquid. I mean, that's more than enough to cover. It's insane.
Bert, I do have to mention too, they have 23 billion in cash and cash equivalents.
Yeah, that's right. I just skipped the actual dollar amount and went right to the current ratio. It's great. So what are they doing? They're also paying down debt. Long-term debt's down 1.7 billion too. I mean, it's just great. I mean, some of that cash is going to be put to work. It's probably some of it's being reserved because they are going to acquire, or they have an announced acquisition. Whether it happens or not is a different story. They're going to potentially acquire Activision Blizzard to bring gaming. It wasn't cheap. It was a 68.7 billion in all cash transaction. So cash is going to be moved out if this acquisition goes through. Debt will probably increase slightly, but look, the balance sheet metrics are looking fantastic for Microsoft. And because they're so large, they have $1 trillion market cap, they have so much cash, they have such high profit margin on their sales, they're able to make big splashes like this to acquire Activision gaming, Blizzard, and just explode their gaming and pair that with their Microsoft network.
Exploding is exactly what they're going to do. Now, guys, why are we talking about Microsoft? Again, here's a great opportunity to buy a high dividend growth stock, which now that has a yield over 1%. Historically, it's hard to get them over the 1%. They're just like Apple stock, except Microsoft stock, I would say, is much better than Apple stock because Apple has a lot of hardware. They have to physically sell a lot of units, and Apple's dividend growth rate just isn't as strong as Microsoft. So, Bert, is it time to go through the Dividend Diplomats dividend stock screener, my man?
You got it, brother. Number one, price to earnings ratio, less than the S&P 500, Jack. Number two, payout ratio, less than 60%. Three, history of increasing those dividends. And that bonus metric, the dividend yield. Lanny, walk us through that first metric here for Microsoft.
And guys, just remember, we're trying to get to 400 likes. Subscribe if you haven't yet through the video. Give us a thumbs up. Let's get there. Let's get you guys either a sweatshirt, a coffee mug, t-shirt, you name it.
Some Capicola.
Hey, you know, it's me, it's Italian. All right, so guys, let's dive into that first metric for Microsoft stock. Again, trading at $224.93, down 28% over the last 52 weeks, dating back to January of last year. Forward EPS for 2023, we're not going into 2024 yet on the EPS metrics, is $9.55. So that price to earnings ratio is still a little on the high side at 23.55. But Bert, isn't it always hard to find Microsoft at these levels?
Yeah, I was gonna say the fact that it's even in the same ballpark of the S&P 500 should tell you what you need to know about Microsoft. I think that's really the metric to look at here. So check out this payout ratio. Remember, tech companies typically do have lower payout ratios because they need a lot of cash to reinvest in the business to continue growing earnings at those high margins. It's it's needed for the R&D. Microsoft annual dividend is 2.72. That's a payout ratio of 28.5%.
Wow. Say that one more time. What's that dividend payout ratio?
28.48%.
So Bert, do they have room to keep growing that passive income stream?
Not 1%, not 2%, they have a lot of room to keep growing that dividend and acquire Activision and continue investing in the business to keep it going.
Wow. Now to dive into that dividend growth rate again, and that history of growing the dividend. Microsoft's been around for kind of a while now in the tech industry. They've been growing dividends, not 5 years, not 10 years, not 15 years. Actually, Bert, you can correct me if I'm wrong, but they've been growing their dividend now. Again, that passive income stream to you, the shareholders, for 17 straight years, if I stand right on that.
Yo, I'm gonna fact check you. You are 100% right, Lanny. 17 years for Microsoft.
17 years.
They're almost an aristocrat, which there aren't that many tech companies in the aristocrat arena. That tells
watch out, IBM is what Microsoft is saying.
Yeah. So every competitor is gunning for IBM, and that's how it's been for them. All right. So the yield, we've already teased it. Let's just throw the number out there. It's 1.21% after the stock continues to fall over 52 weeks and 6% year to date.
Exactly. So guys, that yield now over 1.2%, historically hard to get them around, that form of yield. The 5-year dividend yield on average is 1.14. So they're trading almost, 10 basis points higher than a 5-year yield on average. Again, 1.6 trillion by market cap, down 6% so far in 2023. Granted, it's only been one whole whopping of a week. To go through the quick metrics, 23.5 P ratio, barely a 28% payout ratio, 17 years of growing dividends from Microsoft stock at a rate of just about 10%. The last increase was at 9.7%. So literally spot on with that 5-year dividend growth rate on average. Very clean balance sheet, liquid, billions of dollars of cash, over 20 billion, almost a 2x current ratio. Long-term debt's going down, revenue's going up. What you gonna do, shareholders? You're gonna buy more Microsoft stock?
Well, man, I was half expecting you to go into the woo at the end there after going through it. But all right. So here's our thought. Let's give our analysis here. Obviously, we're interested enough in Microsoft that we're talking about it today, which is a testament to where Microsoft is and where the metrics are looking from a historical standpoint. I mean, the financials speak for themselves, as Lanny covered them. They're great. So what are we going to do here, Lanny? What's your gut reaction for Microsoft for your portfolio potentially?
All right. Again, a great long-term play. Mm-hmm. If you're trying to buy individual dividend stocks and you're interested in the tech space, buying and starting a position right now is not a bad thing. Obviously, do your own research, not personal financial advice right here. A little disclaimer, but those can start a position. What am I going to do? I'm going to keep watching them. I'd like to see them closer to 210, that 200 to 210 space. Just trying to figure out, if that's where I want to go versus just buying the S&P 500.
Yeah. And that's the $1 million question with the yield and with that. And I think for me too, I'm with you. I'm going to keep watching. I'm going to be keeping a very close eye here on Microsoft. And one
Buy
thing,
Microsoft.
yeah, one thing for me is I've been talking over the last year about how I want to do portfolio cleanup. You might have seen tweets about over the last month or so about how I have a lot of small positions that don't pay me a lot of individual dividends. I have some that don't pay me any dividends, like Warner Brothers Discovery after the AT&T spinoff. I have $554 currently in that stock position. Would I rather have WBD or would I rather have Microsoft? I have to ask myself a question about Occidental Petroleum. What do I continue to do with that? Their yield's 0.84%. Do I trade it up for Microsoft? But also considering Buffett's invested in Occidental, he's probably going to double, maybe triple that dividend too. So it's like, what do I want to do with my portfolio? Where does Microsoft fit into it at these levels? For me, is it a stock that I want to start buying 1 share per week of Microsoft while it's in the low 200s that replaces J&J? That's also an option for myself. Not that you're not going to get a banger for yield, but it's a way to just slowly keep growing that Microsoft position.
Wow. I mean, you just dropped some fire right there. Literally buying a share of Microsoft per week at these levels below 225, below 230. What's kind of like your ceiling if you were to do that?
And that's the thing. It'd have to be a very low ceiling. And it might be close to that ceiling right now of if Microsoft's below 220 then I buy it on Monday. If not, I look elsewhere in my portfolio. And that might be the logic I set up for this.
Interesting. So guys, the viewers, are you buying Microsoft stock in 2023? Do you think this is a great stock to buy right now as the green week that we just had, but the red week Microsoft just had? Do you see further downward pressure on Microsoft stock? Let us know in the comments. If you already own Microsoft stock, give this video a freaking thumbs up. Let's go.
Guys, what do we always say now to end these videos? If you're not with us, you're against us.
Guys, don't forget to subscribe. Appreciate the support. Keep buying dividend stocks in 2023. That was Bert and Lanny from the Dividend Diplomats. Over and out.